In this video, we will talk about what happens if you try to wait to get even. Many a time, the success of investors is judged by the way they handle losses in their portfolio. Less mature investors tend to give too much value to their cost price. Everyone wishes the market price to be always above their cost price. One must understand that operations of the company are never influenced by the market prices. So, whenever the price picks back up after a downturn, some investors are in a hurry to sell the stock above their cost price. Mature and seasoned investors give value to expected price and market price, but not to the cost price. They are fully aware that the market does not care about their individual cost price. Just because the current price is above your acquisition price, you should never be tempted to get out only to satisfy your emotion of exiting without loss. If your conviction is strong, as well as being backed by strong fundamentals, mature investors will not even hesitate to pump in more money into the stock when the prices trend lower or even when the price is on an upward trend above your initial cost price. For example, Vivekam has advised investors to buy Bajaj Finserv in one of our products. The recommendation was given out on 31st of March 2020 when the price was 4591. Investors in our products are always given expected price of Vivekam on the date of buying itself so they can understand why a particular stock was selected. In the following few months, for the month of 2020 April, the stock went to 4,288. In May, it went down further lower to 3,985 also. Casual investors at this point feel very jittery on the drop of the price and constantly compare it with their cost price of 4591. But because we had advised Bajaj Finserv based on reported numbers and multiple filters on top, smart investors would have purchased more at this dip. Let us have a look at what happened in subsequent months. July low was 5,802, August it was 5,982 and so on until December where the high was 9,453 and finally reached our expected market price. So Vivekam advises sell on all of our client portfolios. They are all sold. A nervous investor would have gotten out at Rs 4,600 after the dip and subsequent rise in July. A smart investor is one who trusts the fundamentals and a process-based approach to investing and thus holds on to gain close to 90% on the stock. It is important to take away that mature investors are those who realize that the long-term sustainable growth comes from asset classification and process-based approach backed by discipline. One should not panic and frequently adjust their investments within the asset class as it only represents a very small portion of the total wealth you have.